Welcome back. Now talking about Preline. Preline Limited is seeking to acquire another round of shares in Eterna, 9 months after the oil and gas firm acquired a majority stake in the investment company. Preline Limited plans to purchase 1.3 million shares worth 17.55 million.
June.
Oh, okay. I see that we are already joined by Mr. Garuba Kurufi.
They promised to anybody that applied and qualified.
Okay, please hold on, sir. Please hold on, sir. We'll come to you shortly. All right, thank you so much. Well, that's one of our guests. I already talked about the fact that he will join us later on the show, Mr. Kurufi Garuba, the MD, APT Securities. Well, that's him. Well, let's talk about what this now. Preline Limited is seeking to acquire another round of shares in Eterna, 9 months after the oil and gas firm acquired a majority stake in the investment company. Preline Limited plans to purchase 1.3 million shares worth 17.55 million naira from minority shareholders as part of the agreement for the initial 60.98% ownership stake acquired last year. In document obtained from the Capital Market Authority, Nigerian Exchange Limited, Eterna explained that the offer was made to comply with Part 12, Section 131, Subsection 1A of the ISA and Rule 445 of the Securities and Exchange Commission's Rules and Regulations, which requires Preline to make a mandatory takeover bid to all the other shareholders of Eterna PLC other than Preline Limited. The company offered to buy the stocks at 13 naira 50 kobo per share, increasing shareholders' investment by 54%, considering the offering price is 7 naira 3 kobo, above present market price of 6 naira 2 kobo. Preline's offer is limited to shareholders whose names appear on Eterna's register as of June 30, 2022, and must complete and execute the acceptance form included in the mandatory takeover bid document and delivering same to the registrar within the acceptance period. The acquisition will increase Preline's ownership stake in Eterna to 61.08%, with a total of 796,269,774 shares held, pushing Eterna closer to becoming a private company. Its current investment in the firm is 4.93 billion naira. Now, this is where Mr. Garuba comes in. Let's look at this particular rule that says that for any acquisition that would result in ownership of over 50% of the total outstanding equity securities of a public company, the acquirer shall be required to make a tender offer for all the outstanding equity securities to all remaining stakeholders of the said company at a price supported by a fairness opinion provided by an independent financial advisor or equivalent third party. Now, the acquirer in such a tender offer shall be required to accept all securities tendered. Now, the question for me is this a progressive or regressive position? And, who does this favor? This is for you, Mr. Garuba.
Well, I will say it's a regressive position because in the past, 5% of the outstanding shares, at least 5% of the issued share is what they normally take. But today, since the Ardobat issue, where they just picked 500,000 out of over 300,000 held by the minority, it makes nonsense of these provisions. You can imagine buying only 1.3 million for a share of about 500 million outstanding by the minority. If you take it, this is 0.003%. And don't forget that whoever applies for this tender offer, his share will be vacated from his account for that period until such a time that the allotment is done. You cannot apply for tender offer and go to the market and trade your shares. Having warehouse your share for that period, you have no ability to trade it. At the end of the day, they say they are only taking 1%. That means for whoever give only 100,000, he will get 1,000 done. So if you have 100 units, you get only 1 unit paid at that money. It's not worth it. But it's better.
Oh, I guess we lost connection with him right there. But of course, you were agreeing with him. So, Ambrose, let's have your thoughts, or maybe you want to continue from where he stopped.
Yeah, actually, like what you just said, you said whether it's a progressive or
progressive.
I would say fine, it's progressive in nature, but I think here the regulators have to sit down and make clear differentiation between mandatory takeover and mandatory tender offer. Now, as you are reading, the intro, you are talking of mandatory takeover. Takeover is run from tender offer. Now, when you say takeover, you are bidding to take all the share of, just like example, I just cited that of salty oil, but I want to know for takeover process, like what the Dangote flour did when Ola want to acquire Dangote flour. That is called takeover, because in this place, Dangote has about more than 80%, and the share value of that is more than 40 billion. That is what the act said. If you go to can about it, 113 or 173 or 124, that expect that if a company has just acquired 30% of a company, you need to do a tender offer. Also, if the company has less than 20% float in the market, you don't go more than that. But if the company is below 40 billion worth, you can keep your 20% float. But if the company worth more than 40 billion, just like the life of Dangote cement today, MTN today, Brass cement, because the value in the market is more than 40 billion, that is why their float is less than 20%. But for those that your money is not up to 40 billion, you can leave your 20% float. And that is what NSC have used to protect the minority investor in that company. But for now, in form of for Eterna industry, for me, Eterna is a good sector, is doing well. But what Eterna, like Raji said, what Eterna is doing now, for any investor that wants to just lock himself in for just 1,300 shares, for me, it doesn't make any sense, because one, the company is doing well. And then for me, I would put my share for suspension because I want to partake. And also, if you look at the qualification date, it's far back around the June 30th. For those, even if you are buying Eterna today, you are not qualified. Then for me, let the performance of the company was seen and the acquisition impact was seen on the company, be the attraction, not the takeover or tender offer. Just let the investor understand that the difference between a takeover and tender offer. Takeover is when you are discussing like that of Dangote flour. After seeing that Dangote has about more than 80%, just before they can take over everybody, they have to seek approval or a waiver from what we call Consumer Protection Council. So that exactly, then that is why able to discuss then to pay everybody at 24 naira and it fly. But for what we are seeing today, I think the regulator should come and give us a straight and a decisive direction. Not that you do it today differently. Let's know what we are doing in the market, because if you look at that of Honeywell that's ongoing now, for all people that have done the tender offer, I would say that of Honeywell is better, because that one is looking for almost 79 million. But that of offer what's it called? 40 oil was just 500,000 units. This Eterna is 1.3 units. While that of biogases was just 1 million units too. You can see that these things and also the price, the majority shareholder also bought this. Most of them are adding to this. Some are listing as flat, because for that of flour Honeywell now, what the price around there 4 naira 20 kobo. For that of biogas was done around 11 naira. While that of FO was also around that 65, 62. No, for me, investors should also know that, and let the regulator come and give us a clear direction and make what will guide the market, so that the market will not go up and down. So that also let them protect the minority. They seek, they are protecting the market, because with all this one, they are not protecting the minority shareholder. Let's make the regulation or the rules very clear and let it be applied to anybody, not just left and right, so that at the end of the day, the market becomes transparent to attract more participants.
I think you already answered some part of my next question, but of course I'll direct that question to you. Now, what exactly is the benefit of mandatory takeover to minority shareholders?
You said it, mandatory takeover. That means the acquirer needs to take everything. And the shareholders that the offer is being to, they are meant to render their shares. Now, what is the benefit? If a company wants to, maybe they want to leave, we've seen that usually mainly when they want to go to become private company. Like we saw that in a Mobile. Of course, it was a mandatory takeover. And of course, when they did that, Mobile became a private limited company, no longer a PLC. However, there are some shareholders who, I'm sure they won't even see this notice. Yes, it has happened. And when that happens, that means they also follow Mobile to become a private investor in those companies. Well, we don't normally encourage this kind of issues to happen, whether it is a mandatory takeover or it's a tender offer. because we want to increase the number of listing in our markets.
Yes.
We just have over, not up to even 200 listed companies. And we want to improve and have more companies coming to the market so that investors will have a lot of companies to choose from in terms of their investment. So I will say that the companies too should also look at the benefits.
Yes,
okay, I think Mr. Garba wants to say something.
Yes, okay, sir.
Mr. Garba, okay, please go ahead in a minute or two.
Hello, sir.
Can you hear me?
Correct ones. Mobile, I can hear you.
Okay, go ahead.
Mobile, now 11 PLC did not have mandatory takeover. What they did, they just mandatory tender offer.
Okay.
They just took 5%. It is still PLC and it's trading in NSD market.
Okay.
But those who had mandatory takeover, like Coca-Cola, NBC, 7-Up, they had mandatory takeover because they exit from the market and become a private company. The only time you have mandatory takeover is when the company wants to become a limited private company. But if you remain PLC, you don't have mandatory takeover, you have mandatory tender offer, like Mobi PLC.
Okay.
All right. Thank you for that clarification. Now, let's talk about this. This particular segment is more like for education, to educate a lot of people, because the federal government has made bond offers, and we see a lot of bond offers coming up. But we just need to educate the people. When you say bond, what exactly does it mean? Ambrose, I'd like you to start that conversation. Like I said, it's just in few minutes we want to educate the people so they know what to do.
Bond is here, we are borrowing money from the federal government and they are paying you interest on what we are doing. And also there are returns, or they pay interest twice in a year, every 6 months, depending on the period. But bond, I think that is a long-term instrument for 3 years, 2 years, and 5 years and above. And the good thing is that for those that don't want to take risk, want to look at the world bond, and because you want to know exactly that every year you are sure getting 13% from the government, fine. And also because it's coming from federal government, you know that a government like federal government will not default in paying. That is why you see when there is private bond or corporate bond, people want to go to federal government bond first, because you know that this year the CPN can even decide to create money and pay you off. But for other bonds, that is why people want to see that the risk there is very low. They play bond. But for those that have little money, yes, we encourage them to do bond. But personally, if you have fund, I'll tell you later for say, instead of you waiting for that small percent for so period of time, can't you go to equity market and do some calculating risk?
For example, like how much, because this particular one that the federal government is doing, the minimum is 5,000 naira.
Yeah,
and all that. So if somebody has...
That is savings bond. Okay. That is savings bond, which is good for those that don't want to take this quick. I still do that, but for me, 5,000 on what? On 13%, or how much is going to get there? Or there's
about 9 or 10%.
There are some people that want to do that conformably. They know that my money is safe. At the end of the time, I get my return. Fine. It depends on your investment objective and what you are looking at. But for those that really want to grow their wealth faster, yes, you'll be getting something there. But I advise diversify your portfolio. How the ones you are doing in equity, how the ones you are doing in bond, because they have different forms of increasing your bottom line.
So are you trying to say that the bond actually favors the issuer and not the investors?
No, everybody, your money is intact after the 2 years.
Yeah, but you're saying that we need to diversify, because at the end of the day, you may not, the return may not be
for those that are investing small money, like just a minimum of 5,000 naira. Yeah. You are putting 5 naira there for 1 year. They pay you 2 times in a year or for 2 years. How much is 5,000 going to return for you? But if for a stock I have calculated no risk, I have done due diligence, I can make even 50%, and we have made 20%. It's better off now take that risk and see what, because of people don't want to take. That's why I say bond are where you have less risk. For those that are risk averse, look for bond. But if you're something like me that will take risk, come to equity market. That's where we'll play. And I can.
Let's listen to the stock broker, and I think he's an advocate of bond. So yeah, let's have your thoughts.
Well, we want to say the Nigerian market, especially the NGS, is not a market it's an equities securities market. It's a market it's a securities market, different asset class. Yes, there is equity, we encourage that, but there is also this bond aspect. Bond is also another asset you can trade on. Like he has said, you have the private bond, that is the one issued by companies, and of course, before you go into those investment, that means you are becoming a lender to these companies, and you have to be sure that their cash flow at the end of the day will be able to pay you the agreed coupon or the interest rate, as we will call it. Now, there are a lot of participants involved in that bond issue. Most importantly, the rating agency is there. They will look at the bond and say, yes, it's a B bond, BB plus, and all that. And that will now inform investors' decision. Now, coming to federal government savings bond, generally, it is done to encourage savings and investment from the populace. And it's a pride. You know, instead of government borrowing, you know, externally, let them borrow from their citizens. Because, I mean, look at the Sukubong, for example, now, if I'm to mention that. These are specific projects. The bonds are raised for specific projects. And we are seeing the performance of the money raised, what the money is being used for. So, and federal government too, because they have taken money from the public, they will be mindful that they need to use the money for the purpose in which it was meant for. Because they must pay coupon, that's the interest. They are even to even encourage investors, they are doing it on a quarterly basis.
Okay.
Quarterly basis, so that you can see that investors can manage their cash flow. If you are sure that every quarter something is more. However, I must warn also, with inflation rate hovering above 20%, and you are getting the federal government bond, the rates
12%,
10%,
10%, 9%,
yes.
about.
But it's a fixed income securities. That means your returns are fixed.
It's not a function of the economy's performance.
Exactly. And here I said it is good for those who don't want to take risks. I advocate it for retirees.
Okay.
You know, because they cannot take that risk. Once they invest, they are sure at the end of every quarter something comes in. And it's also good for even traders to diversify their proprietary trading. Okay. Because you can't put all your eggs in one basket.
That's a good place to end this. All right, we take a break now. And when we come back, we will analyze the NGX oil and gas sector. Yes, we'll be looking at their performances. Stay with us, don't go away.